Hey everyone, welcome to Alpha Insights. I'm Adam. Great to have you with us.
And I'm Gareth. We've got a choppy market day to unpack, so let's dive in.
Today felt like a market mood swing on a tightrope. The S&P traded in a pretty narrow range and finished slightly higher, while the Nasdaq outperformed as technology names showed some real strength.
Exactly. Tech carried the tape. Several big tech companies reported quarterly results that beat expectations, and that enthusiasm bled into semiconductors and software stocks. When those segments light up, the Nasdaq tends to get a lift.
Right, and it's interesting because outperformance in tech doesn't always mean the whole market is charging ahead. The overall move was subdued, narrow trading, which tells me investors are still cautious.
Cautious is the word. Part of that caution comes from the Federal Reserve. Fed officials, including Chair Powell, kept signaling patience, basically saying they want more data before making any policy changes. That keeps the door open, but not locked for rate moves.
So for listeners, what does Fed patience translate to in practical terms? It means no sudden surprises right now. If inflation cools and jobs look steady, rates are likely to sit where they are. But if data deteriorates or heats up, the Fed can pivot.
Exactly, which is why this week's data calendar matters. Keep an eye on inflation prints, the employment report, and consumer spending. Inflation tells you about price pressure and how urgent rate cuts or hikes might be. Employment shows how tight the labor market is, and consumer spending is the backbone of growth. It tells you whether demand is holding up.
Switching gears to sectors, energy didn't have a great day. Oil prices slipped on worries about global demand and that weighed on energy stocks. Meanwhile, healthcare held up, buoyed by positive clinical trial news from several biotech firms.
That split is telling. Energy is very sensitive to global growth expectations. If traders worry about demand, say weaker activity in major economies, oil comes under pressure. Healthcare, especially biotech, can move independently when trial results surprise to the upside. Those binary outcomes can provide a defensive chunk of performance in uncertain times.
I want to pick up on something you said earlier, earnings beating expectations. Why does that matter beyond a short-term pop? It's about revision of forecasts. When companies deliver better than expected numbers, analysts may raise future estimates, which supports higher valuations, and it can also signal durable demand in those businesses.
And for tech, that durability matters a lot. Think software subscriptions, semiconductor cycles driven by data center spending, and corporate IT budgets. Positive earnings suggest companies are still investing, which is a good sign for growth-oriented portfolios.
On the global front, markets were mixed. European indices gained ground while Asian markets traded lower overnight. Different regional dynamics, time zones, and local economic data can produce that split.
Yes, Europe getting a lift could reflect region-specific catalysts or commodity moves, while Asia's softness could be tied to local growth concerns or sentiment after the US close. It's a reminder that global markets aren't a single animal. They move for different reasons.
Given all that, market strategists are sticking with a common refrain: stay diversified. That means not putting all your chips in one sector or asset class because headlines can swing sentiment quickly.
Diversification isn't glamorous, but it's practical. It helps smooth returns when one part of the market rallies and another lags. In an environment where central bank signals are data-dependent and geopolitical or demand risk exists, a balanced approach reduces downside risk.
All right, quick practical takeaways for listeners. Watch the inflation, employment, and consumer spending reports this week. Respect the tech-led strength, but don't ignore the energy weakness and keep portfolios diversified.
And remember, Fed patience means opportunities and risks coexist. Earnings can give clues about durable demand, but macro data will keep moving the needle. Stay informed, not reactive.
Great points. To wrap up, let's summarize the headlines together.
Markets were volatile but overall muted, with tech shining and energy under pressure.
The Fed is waiting for more data, so upcoming economic releases matter a lot.
And the smart move remains diversification, balance growth exposure with defensive elements.
That's our snapshot for today. Thanks for listening to Alpha Insights.
Catch you tomorrow, and stay curious and keep an eye on those data points.